market is booming. Who is it? Who is it that gets wrecked? Other assets are trending up. Well, people that take over leverage positions at the top, then the price turns down even a tiny bit. And who is it that loses out on occurrences of opportunity when they should be trading lower time frames? Exactly those same people. Why? Because they're putting in over leveraged positions and they're holding on to them, trying to swing trade. And then when the price dips 1% or 2% or 0.5%, when they're sleeping, they lose a significant portion of their profits because they bought the top, and then instead of having just repositioned at that little dip and ready for the next trade, they end up being out of the trade as the price continues to run away from them in the upper direction. How could they avoid this? Well, very simply, they can avoid this by trading lower time frames and not taking leverage positions, or at least not over leverage positions. So if you're going to use leverage, keep it extremely low, 2x, 3x maximum. This is not egg boiling advice, but taking over leverage positions of 5x, 10x, 20x, 50x, 100x, 125x, those are all basically degen gambling positions. Why? Because volatile assets are volatile. So they are likely to turn around on you. And even if the honey badger decides to keep running up and up and up on your leverage position and you're in profit, but you haven't taken your profit, the moment it turns around, it's going to destroy your profits. You'll be back flat very soon, if you're lucky. If not in the negative, very quickly, if it just dumps out. Why would it dump out if it's pumping so hard? Well, look at the returns. You think that the price action is what determines the movement of the asset? It's not. It's the returns, right? The standard deviation of returns, the volatility. That's what determines the price action. And the volatility with the correlation is what determines the direction of the price action. And you can see very clearly, if you look at the 4-hour time frame of Bitcoin, for example, over the past couple of days, that ever since the initial pump, the returns have been diminishing. And yes, there was another nice little pump today. Again, if you'd taken out profits when it hit roughly the same area of where it was a couple of days ago, and then dipped a little, if you'd taken out your profit roughly at that high 2 days ago, and then repositioned, you would have had another % or so of a cheaper price. And that means when it went back up again today, you would have made that percentage again towards your gain. And when it hit the second daily level, sell level, if you will, what some people call resistance, but it's really just sell pressure, second daily level of the VRE, that was another area to take profits today. In fact, even the first sell level was an area to take profit. Even the top of the monthly range was an area to take profit. If you look at that area of the top of the monthly range, that's when it started to walk sideways today so far. And what did it do on the 15-minute time frame, for example? Well, it mean reverted to the 1110 RMLR because, of course, that's what happens. And now it remains, last I checked some minutes ago before I left the desk, there remains a mean reversion to be completed on the 30 power mean well as the 3012 RMLR, which is just below it currently. When will that hit? Doesn't matter. It is in mean reversion to that area. Now, it doesn't mean it's in mean reversion to that price. It means it's in mean reversion to those lines. And those lines are currently moving. Well, power range is moving up, and the 3012 RMLR is also moving up. Will that happen by the time of traditional market open? Maybe. Will that happen later? Possibly. What I can tell you is it is far more likely to hit those lines before, especially the 3012 RMLR, before it is likely to hit the third standard deviation band to the upside of the RMLR again. How do I know that? Because that's what the probabilities indicate. And that is what the statistics bear out. And that is why we trade the VEPs. And that gives us a very good indication of a range of entries and exits, and to know where it's not likely to go. Does it mean you should short? No. It means you should look at the information and do what it tells you to do. If you don't know how to read the VEPs, good news for you. You can learn how to read them for free by joining the Alpha Trading Discord, which is free to join. And you get free indicators when you start the volatility starter pack, if you will, as well as the volatility starter chart. Put that together with all the free information that we've built for you to learn for free. Educational videos, written documentation in the educational channels, a big book that we created, an authoritative book about how to trade the VEPs, and even a cheat sheet that helps you learn the most important tendencies of the probabilities of price action based on volatility and entropy. If you know how to read that information, you're in a much more likely position to win trades consistently and profitably than if you use something like lagging information, which is what traditional technical analysis is based on. And we don't use traditional lagging information at Alpha Trading precisely because it is more likely to help you get wrecked than to help you become a profitably, consistently winning trader. So, take that for what it's worth. Remember, buy low, sell high. And the way you know what to do about that is to know how to learn, is to know how to read the VEPs, which again is available to you for free in the Alpha Trading Discord. The link to that is alphatradinghq.com/discord. Again, that's alphatradinghq.com/discord. Go there, join, it's free, learn. Once you've learned, there are of course more advanced tools that you may purchase a subscription to, but we do not recommend, in fact we recommend against purchasing our advanced tools until you know how to read the basics. Why? Well, because if you don't know how to read the basics, how are you going to know how to handle the advanced stuff? Think about it. Would you get into a luxury sports car and start driving it around if you've never even driven a basic car? Of course not. First you need to learn how to drive. Then you can drive a fancy car after that, right? After you are good at driving a basic car. Until you're good at driving a basic car, you'd be a fool literally looking to get wrecked in a luxury sports car. So, if you're serious about trading and not just being a degen gambler, then by all means, jump into the Alpha Trading Discord. Get yourself the free volatility starter kit of indicators. Get yourself the free volatility chart for beginners. Get your hands on the Big Doc, which is our authoritative book, which we made a special edition for beginners. Ask questions in the channels. Join the live streams. You can even participate and speak, ask questions. And we run those live streams Monday through Friday, starting at 9 a.m. Eastern Time. Any days that we skip are either holidays or random days when there might be other technical difficulties, but typically we do those 5 days a week, sometimes more, but usually Monday through Friday, 9 a.m. Eastern Time. And yeah, hope to see you there. Happy trading.